Hey guys, it's Will. I'm going to do market, analysis and talk about some stocks and ETFs, but as I do usually. But as I showed last time, I've been talking about markets pulling back, since about a month ago, and very repeated, repeated videos. And I don't like to be negative in terms of just to get clicks or anything like that, but. In the last one, I mentioned energy and commodity, and that's usually like a sign that people are going into safety or inflation fears and stuff like that. So what we'll do is we'll take a look at the market. Um, I'm using TC2000 for the software, and if you want to get a free trial or $25 off a purchase, you can check out the link in the description below the video. I've got the gold plan, and I use real-time US real-time data to get instead of a delay in the 50-minute delay. So the reason I mentioned in the videos before that the markets were dropping and stuff is just based on technical analysis. So some of those there's been a lot of volatility here. So you see some down periods that were fairly short, but once you break like the 50-day, so if you pull back, you've broken it down, but you didn't get to, you got down to this point before you reversed. And what I do with these charts is I have the momentum on here, MACD it's called, or price percent oscillator. So when you see a crossover, that can be a sign of a reversal. But I like to see it get to zero, the zero line, and then above. That's usually where it crosses the 50. But so once you see, you've got a bunch of scenarios, but you broke the 50. But what you wait for is to see what happens if it comes back and gets up above the 50, or this 8 is the EMA, the 8 EMA. And so like you can see here where it comes back and it doesn't make it, and then it continues to drop. So, but 50 and 200 are big points of resistance or support. And when you break the 50, it's significant, especially with this type of candle. So another thing you can do is look at the candlesticks themselves. So when you have this kind of a candle, it's a bearish engulfing. So it engulfs this previous candle, and then big, huge candles. And, you get this, once you see also it breaking down below the 200, that's a significant point as well. You can wait to see if it's going to support at that point. So if you're buying inverse ETFs, this is a point where you might sell and wait for it to do something at that point, because you'll see like it'll break down and it'll go back up, or it'll come back up here and bounce off the 200 and go back down again. So it's like another leg down. You're also at a fairly low point with the momentum. That doesn't mean it's never going to go lower than that, but it's just a point where you might see a turnaround. But right now there's just a down sloping angle here on these. There's no sign of any type of reversal there, but it can happen quickly. But right now this point was broken down at the 200, which is pretty significant. There was no support whatsoever at that point. Next we have the S&P 500. So same sort of thing. You can see here, you created this lower high from here to here, and that's a sign that you're in a downtrend. Broke the 50. The 50 is turning down, but usually what happens is, your 200 will be the potential next target. So if you did inverse, that's the point where it's probably going to turn around, at least temporarily. So you might want to sell just between these 2 points, but we'll see what happens with the support. There's also supports at previous lows. So you broke this low, that's a negative sign. There's a low way down here, that's below the 200. So if it gets below the 200, this type of thing might be a next target. Dow Jones, it also broke the 200. So you'd be looking for support somewhere down here, as a potential point. And you can see the slope is pretty down, straight down. There's no reversal. It only takes, 1 or 2 candles potentially to reverse this. Another area you can look at is this oversold and overbought stochastics. So we're down, at a pretty low point as well. IWM, that was the worst one of all usually, because it's been in this long consolidation period. But we did recently break down a really long support. Like you can see multiple points of support, and then it broke down below that. So there's nothing really in terms of moving averages. There is another point down here, and then this whole section, it's hard to say if that's really strong support or not, but it's like a free-for-all at this point. So these are all negative, really negative charts, obviously. So the other thing that's a problem is the volatility. It's not like, you can see what's happening, but a lot of times you just get these short little spikes. But we are getting up above the 50, so it's in an uptrend right now, the volatility. And the problem with the volatility is that the things will go up and down quite badly. Like yesterday was the 20th. We had this uptrend, this 10-minute chart. And then right around 11 in the morning, it just started completely tanking. At the end, you can see how much it dropped. So it's very volatile. See this as well. It came up, drop, came up, drop. That only came up until about 10 or 11 o'clock. This was a bit later, and then a complete tanking. So I don't really like that scenario from a trading perspective, because a lot of times you judge based on what happens in the morning, like the first half an hour or so. So because of the volatility, it's not a great time to do anything, in my opinion. But you have options of inverse ETFs. So in the States, you have SH for the S&P. Now the problem is this one is, it's pretty steep and it's heading towards the 200-day. So I don't really like that steep of a slope in terms of getting involved there. But RWM, same sort of thing. But, that's a possibility. DOG is an inverse for the Dow Jones. And because it's right at the 200, like I don't like that look of it. And then for the NASDAQ, and same sort of thing, it's right at the 200. So that, like you see here, when you pull back and then you have an up candle, that's an entry point because you've established a uptrend. But now it's pretty steep and it's right at the 200. So not a great point in my opinion. So there could be a pullback and then another, upswing. So that's not a great spot. If we look at actual ETFs, there's not a lot of options. So you have silver was peaking up a bit, perking up, but like it's really steep. And like I said, this also is right at the 200, and the gold is in a lot of resistance here, and it's right below the 200-day. But these are ones that are potentially poised to do a break at some point soon. And then the platinum and palladium looks pretty good, broke up over the 50-day. So this one is something. And like I said, right here, the price percent oscillator, it's right at the 0 line. So this is right at a good spot to be getting in. It's a bit steep here. I might wait for it to pull and then go again, but these are spots, that look decent. Metals have been doing pretty good. So my cat. So there's some metals and stuff like that. China perked up a little bit. It's right about that spot, not quite at the right, up at the 0, but just about going above the 50-day. And it's got a lot of resistance. It's been in a big downtrend, and you can see these points went up above the 50 didn't quite sustain themselves. And obviously there's a lot of risk in the Chinese markets, but So silver, gold, some commodities, soybean, stuff like that, has been peaking, perking up. And when you look at like something like gold or whatever miners, you can open up in the TC2000 and look at stocks within that ETF if you want to buy individual stocks, and you can run your scans on those as well. So that's about it for today. Between the market downtrend and the volatility, it's not a great time to be buying very much of anything unless you're a really short-term trader, in my opinion. And even some of the couple of stock or ETFs area sectors that are doing well, the metals and mining and stuff like that, those are pretty volatile from day to day. You see how they went up and down in the like even the financial, you've got this big up and down like this. So hope that helps. And don't forget, you can get TC2000 in the link below for free, or get a $25 off purchase, and that helps my channel. It doesn't cost you anything, and I get a little bit of commission for that, and I use it every day. I love this program. So we'll talk to you guys in the next video. Bye.